Hi, this is Raju here from Precise Trader. I welcome you back into this topic on Precise Trader's price level system fully revealed. In fact, we are very proud to say that this is the first time we are revealing it to the world, meaning in the sense, this one, we have joined with FX Trade and we are trying to share the system which we have developed over the years. And in fact, it was not that easy job. We have been doing it, for the past few years, trying an R&D and being a day trader. I'm still, I do aware the problems we face, when we become a day trader. Okay, what we are going to do is, please take note of the risk disclosure. This is, especially, trading in Forex is risky. And this workshop, we are going to discuss is going to be purely educational. And also for those of you who wants to try it out, I strongly suggest you to try it out, and it will be best, if you can try it out on a demo account, to see for yourself how effective is the system or how easy to use the system. And moreover, you must understand the fact that, sometimes, when you look at the system, it may look a bit complex. But in actual fact, when you use it, the more often, the more user-friendly it is, and the more easy to take a trade, especially, for day traders. Just like, when you learn to drive, when you enter the vehicle, first time when you enter the vehicle, it looks a lot of complex. But as you go on, especially, after you get your driving license, and especially you have been driving over the years, you tend to be, very well versed with the tool. The same manner, I think, you need to try yourself for you to see how effective the system can be. Okay, the agenda for this today's session is, is going to be the advantages of Precise Trader's trading system. We are going to share with you what are the advantages, and the price level principle, which is the invention which we have done. Of course, it was done over, it's not like a 1-2 days affair. It was done over the years of research, and there's a lot of hard work has been put in to develop this system. And also, unlocking the PT daily reports. Okay, basically, we are going to share with you, what is so special about the reports and how can be used, right? And economic calendar and price zone alerts. High-low time, PT news, strongest, weakest, best cross barometer, dashboard, the ultimate trading tool, which is going to be very useful, especially, if you learn how to use it. I mean, this is a one tool, this one tool can give you a lot of information, which you can use it for your trading decisions, and you can use it with ease, right? And also, this Precise Trader's trading strategies, which would be the most important for today, because we are going to reveal the strategies to people, to traders, especially, who are looking for some ways of improving their trading standards, especially for day traders. And of course, you can use it for swing trading as well, to a certain extent, all right? And of course, we have a time, then we will be doing live trading, and it all will happen, how, the time permits. Then if we have the time, then we will definitely do live trading together with the question and answer session. So, well, these are the agenda for today's session, and certain tools I may be running a bit fast, because, the reason being is because we do, twice a month, webinar with FX Trade. So for those people who have not been used, so at least it will best, and especially who are coming first time to the session. Just a brief, info about Precise Trader. Precise Trader has been active in FX research since 2006, and in fact, I've been in the business since 1995. So in fact, no doubt, the company was started in 2006. We have been in the business for almost about 18 years, right? And we have been developing trading system for day traders and swing traders, and we publish accurate trading zone level reports twice a day. It's updated twice a day. Basically, the reason being is because we want to keep update with the market's movement that is happening day-to-day basis. And we also invented the price level principle, which is a unique tool. The reason why we are saying is it's an invention which we have done. Again, it's done over the years of research. Then also the invention of dashboard, okay, which is you would be, especially when you look at the tool, it might look complex, okay, not to panic, because the moment once you know where to look for, just like whenever you buy a new gadget, especially like for example you're buying a phone, right? So I think it's best if you look through the manuals, when you look at the manuals, you read it, you learn how to use it, then you get the full effective use of the mobile. The same manner, I think if you learn how to use it, then it will be very useful and it will be very user friendly as well. And we developed a trading system that eliminates emotions in decision making. So as a trader, as a trader and a day trader, I know what are the problems we come across, especially when we decide, especially when we make a decision on, entry, exit, and stop loss. And we are also first in the world to cover 36 crosses. To our knowledge, I do not know whether anyone is doing that. Of course, we are very proud to say that. To use the system with ease, no doubt we are focusing on 36 crosses plus gold. It's about 37. We can use it, to pick. The system can help us to pick, which is the market, that is moving right now, and so we can take our trading decisions with ease, right? And we also developed precise trading strategies for day traders. Okay, this is the most important part for today's session, because we are revealing it, especially when we look at the system, we want to see how you can use the system with ease, right? Just give me 1 minute. Okay, because I have not activated this. Okay. Right. Okay, and we provide live signals, right? Day trading as well as swing trading on 36 crosses. So we have been doing the R&D for the past so many years. So and now we are eventually we are there to share it with the public. The advantages of precise traders trading system. Okay, it generates about 3 to 12 trade setups per day across 36 crosses. So the system helps us to choose at least about 3 to 12 trade setups, right? And it's up to us to decide whether we want to take the trade or whether we want to let go of the trade, so on and so forth. And no complex chart knowledge is needed. Okay, understanding of support resistance principle is enough to use the system effectively. So basically, we do not expect you to have a very complex knowledge. By basically looking at all those oscillators, different types of oscillators, different types of tools. Which is we already done it for you. So basically, even if you are a novice, you can trade with ease, right? And our system has been designed to suit both aggressive and as well as conservative traders, especially day traders and swing traders. And it eliminates emotions, especially greed, fear, and hope, especially in trading decisions. So I think these are the three culprits that makes us to do, right? So and as being humans, we are bound to make this. Bound to get committed with this. So the system helps us to eliminate all these factors. And also just to quickly talk about the reports. This reports is in fact we would be sharing this twice a month. So basically I do not want to spend much time on this. This is for the benefit of the first time who are coming to attend this session. This is the trend reports, or the precise trader forecast reports will give accurate trend directions on 3 different time frames, especially hourly, daily, and weekly. And it provides precise entry, exit, stop loss. User can choose best trading opportunity within a short time usually less than about 15 minutes, and accuracy of the reports is unbelievable, and risk reward management is easier. It's pre-trade as well as post-trade, meaning in the sense before you take your entry, you can decide, before you can take an entry, you can decide whether you want to take the trade or you want to let go of the trade. This is how the report looks. Okay, not to worry, later on I'll be showing you, but I just want to quickly tell you, what are the functions of the report, or what are the things to look for in the report, especially when we look at the report. The report gives us a weekly open, monthly open. Basically, when you compare it with today's price, you can gauge whether the market is bullish or bearish, just to by looking at the weekly open and monthly open. And it gives us 3 different time frame trend directions. So whichever type of trader we belong to, right? What we can do is we can stick to that time frame which we are having our focus. Then we can concentrate on that time frame and the trade setup. And it gives us critical resistance and critical support. These are the 2 levels, basically where we anticipate or we believe that the market is going to have a pause or make a reverse. So, and also we have this current week, current month, previous month high, followed by current week low, current month low, previous month low. All these are pulled from the chart, previous week high, previous day high, previous day low, previous week low. All these numbers are pulled from the market. These numbers all are given by us, right? And the most important thing in the report is, of course, we have about 10 set of numbers, we call it zones, we have 10 set of resistance zones, and we have 10 set of support zones. So basically, these zones or levels is where we use to take our entry. The decision is taken for entry, exit, and stop loss, right? So all these zones or levels are used for entry, exit, and stop loss, together with, of course, all these levels which are pulled from the chart for our guidance to say that whether the market is trading below or above, so on and so forth. And the star also denotes the importance of the significance of that level. For example, like 1 star, is significant. That means you have to pay attention to. 2 is more important. 3, and of course followed by 4. And of course, these are the levels that we pay attention to, especially when we are trading, day trading, right? So I think this is more or less I've done with this. Okay, the next is, now I'm just going to tell you which are the levels that we use for entry, which are the levels that is important for our entry, exit, and stop loss. The PT zone 1 or 2, it can be resistance zone 1 or resistance zone 2 or support 1 or support zone 2, either one. That's why we call it PT zone 1 or 2. Are used for first entry, especially when we want to take an entry. When our entry level is determined at this level. It can be also used for re-entry. Meaning in the sense, if we missed it, the second time, probably the market tested, then probably we may want to use that level again for entry. And it can be also used to raise stop loss for swing trading. So if you're swing trading, that's where increase or revise your stop loss. Basically it's just like a trailing stop. You can use that level for the stop losses. And do take note that you need to put in, you need to put a variance of between 3 to 5 pips, because the reason being is because sometimes, the market reverses so nicely at, precisely at the level. So sometimes, you need to play about, whether you want to add on or minus plus between 3 to 5 pips for you to make sure that, you are, whether you want to be in the trade or whether you want to be out of the trade. And the PT zone 4 or 5 are mainly used to book profit. It can also be used for re-entry. It can be also used for raise stop loss for swing trading. So basically, we use this level. So we use, I repeat, zone 1, zone 2, zone 4, zone 5 are the key levels in our report and in our system. Other PT zone levels are used for mainly for re-entry or scalping levels. So basically, like 3, 6, 7, those levels are mainly used for, especially for scalpers. If you feel like, sometimes when you're on the screen you missed it, probably you wait for some pullback, and that's the level it can be used for entry. And the previous day high-low close levels give additional information together with our current, and we also have twice updates. One during Europe and Asian session, and we have one before US session. So we have 2 sessions updates. So the US session report is used in the same way, but Asian session zone levels are more important than US session. So what we are trying to tell you is, both the report are effective, but you need to pay more attention to the Asian session. And the selling pressure and buying pressure can be plotted when previous highs and lows are drawn on the chart. So this is just a indication. That means, like together with, like for example, when you see on the chart, the previous high, low, and current week high, low, all this you plot it on the chart, you can visually see, whether the market is making higher highs or higher lows, or lower highs or lower lows, so on and so forth. Okay, now coming to the foundation of the system, or the price level principle. Our system uses theory called price level principle, which is derived by applying the law of physics and Newton's law. So basically what we have done is, we have used the law of physics and Newton's law. So the reason why we are mentioning this is, chances are, you won't be in the wrong side, And the theory was developed, very intensive research on price behavior for the past 10 years, which I've mentioned earlier. And a higher probability trade setup is achieved by comparing open, close, high, low from current and previous day. So basically, you can look for higher probability trade setup, especially when you compare all these levels. Alright? And the higher time frame controls the lower time frame. Example, like hourly trend is controlled by daily, meaning in the sense, if the hourly trend is moving up, the point where we feel that the hourly trend is going to end, we need to look at the daily trends finishing line. So when these two intercept, then naturally, you can see that the higher time frame controls the lower time frame. So same way, daily is controlled by weekly, weekly is controlled by monthly, so on and so forth. Alright? The theory uses tools such as moving averages, trend channels, Fibonacci, Gann numbers, Andrews pitchfork, and Elliott wave in analysis. So basically, how the system was developed, or why it was developed, is basically, we use all these tools in our day-to-day analysis, and you might be wondering, why these levels work so nicely. Is because we use all these tools in getting these levels done, right? So that's one of the reasons why you feel like, the levels are very effective, especially when you use it, alright? And the zones and levels are derived when any of the above tools intercept more than once, right? So the reason is, like like we said earlier on, zone 1, zone 2, zone 4, zone 5, all these levels or all these numbers, play a significant role, because the reason is because, we use all these tools, and any one of these tools may intercept more than once. So, and that's the reason why you feel like, that the levels are working so nicely. Okay, then the zone levels are more complex than you think, but very reliable at all times, right? And not to worry, as I said, here, today we are going to share how we are going to use the system, and I'm going to share with you, how is the strategy, that can be applied for our trading. The price respects the levels 95% of the time, and the theory also compares with significant high and low. Example, day high, day low, week high, week low, month high and month low. So basically, what we are trying to tell you is, especially when you plot the levels, to see, especially when you plot the levels on the chart, and probably you may want to look at on a 1 minute chart to see for yourself, to see, the price respects the levels most of the time, meaning in the sense, either the price pauses at that level, or it may get a minor pullback, or it may be in a range trading, So any one of these three factors will happen, especially when we are at that levels. And the zones 1, 2, 4, 5 are the most significant levels in the report, which I mentioned earlier on. Again, I'm emphasizing. So we need to pay attention to zone 1, 2, 4, 5. Especially when we take our decisions on that. Okay, now the next is, now what I'm trying to do is I'm just showing you what are the tools as a trader, we need to use, before we decide on to take our trade decisions. Okay, the next tool is, we call it a PT news. This is where we indicate to the traders, or to indicate our clients, to say that, okay, this is what is to be expected today, Today, we can expect a move on, So whatever we predict, or whatever our forecast, we share it with the clients, right? And we use, the Elliott wave, and also all the researches that is provided, we'll be sharing with the clients. And this will give us a latest market updates. Okay, what I can do is, let me show you one sample, or let me show you one. I think you can see this, right? So in fact, this is where we put in, before the US session. So we give for all the majors and minors. So this is a just quick, brief description. Basically it tells us what is to be expected, all right, or what can we expect, all right? So Euro is still, within a trading range. It has an hourly potential target of 132.55, 133.30, 80. Okay, take note, this is hourly. Yeah, hourly meaning in the sense, higher time frame, right? And the violation zone, which is 127.90, 128.65. So basically, what we meant by this is, we are bullish, and we are projecting a price target of this levels as long as this level is not breached. That means, as long as, this level holds, we are anticipating the price should be moving up on the hourly trend. And we have a lower time frame projection, which is mainly for day traders. As a day trader, you need to pay attention to this to see, which is the 15-minute, the potential target is 129.50 or 129 figure level. So meaning, we are expecting in other words, the bigger time frame, the higher time frame, we are expecting to move up. The near term or the immediate time frame, we were expecting it to move down, right? So this is what we meant by that, right? And the bearish violation zone, okay, basically that means, to support our view, to have this target, this level has to be protected, or this level should not be breached. That means, as long as this 131.55 to 132 figure is there, we still feel that the market is going towards this level, right? And we have a PT anchor low and high. This is not to worry. Later on, I'll be explaining to you what do we mean by that. This is, we say 130 figure to 130.65. So these are the nearest levels to the current market, and this gives us an indication, where or which side of the market is going to move. And we have a near-term resistance, which is 131 to 131.15. So we are looking to short near the resistance, or looking to long near this level. So whichever happens, this is what. So basically, this news is published twice a session. So, as a trader, we can look forward to see, get some clues which side, the market is anticipated to move, or which way, we can expect the trade setup to do, right? So this is one of the ways which we share it with the clients. And we have another tool which we call it a calendar alert. It's basically, this is, you can do your own setting on the website. It tells us, you can set your own settings. How long do you want to have your alert? That means whether you want it 10 minutes before the calendar announcement, or 30 minutes, or before 1 hour. It will just give you an alert saying that there is some data that's out. So take note of that. You might be wondering, why is it all this are there? Basically, like as I said, being a day trader, we understand the problems of a day trader, and that's why the system was developed to make useful for the day traders. And this is another tool, which we have it on our website. This is an alert system that will announce that, saying that the price has crossed the zone levels. So basically, this is an alert. It will give you a voiceover. These are the levels. Like support zone 1 is reached, or zone 5 is reached, resistance zone 1 or zone 5. So when you look at all this, alerts, you can look at the system, or you can get an alert straight away. You should be having a view, or you should be having a view saying that the market is moving, whether it's moving down or moving up. So it just tells us the market is moving, and it just tells us do something, and it doesn't tell us whether should be a buyer or should we be a seller, right? So this is another tool which we can use it to help us in our trading. The next tool is the strongest and weakest barometer. Okay, all these tools. No, not to worry. If you feel like it's too complex. This is we use it day to day, and it can be covered during the weekly webinar which we do with FX Street. Right. The next tool is the strongest and weakest barometer. This is one of the tools, best tools in the website. It shows the strongest cross against the weakest cross compared with other 8 crosses, and on different time frames. So it tells us, whether, we can set the timing, whichever time frame we want, depending on what kind of trader we belong to, right? If you are scalping, probably we can just look at the 2-hour chart, that is more than sufficient, If you are day traders, then probably we may want to look at a 6-hour or 12-hour chart, or even a daily, right? So when you apply the PLP theory, you cannot go wrong in your decision unless it's a false break, or it's in a range trading. 1 and 2 are the strongest. So basically, when you look at the tools, 1 and 2 will indicate the strongest cross, and especially horizontal against the vertical. That means, like for example, okay, maybe let me show you the live one. 7 and 8 are the weakest currencies in the moment, and others, other numbers that is grayed out usually, are mixed signals. Okay, and of course, depending on the time frame. Okay, let me change my screen. Probably I can show you the live screen, so at least you can have that feel. Give me 1 minute. Okay. So this is how the website looks, and in fact, if you look at on the daily time frame, it's like telling us that pound is being the strongest, which is for the day, and yen is being the weakest. And of course, if you look at this 2 cross can be traded, right? And of course, we have an alert, later on, I'll show you. So what I'll do is, maybe let me show you finish the slides, then probably we can look at live prices, so that I think it will be much more easier, right? Okay, coming back to the slides again. The strongest and weakest barometer, okay, gives us confidence in taking and holding a trade, especially, when we have taken a trade, and if we know that, that is the strongest cross for the day. So it gives us, extra confidence in holding the trade, so that is an added advantage. Sometimes, when we look at all these tools, it as a day trader, because as a day trader, there's a lot of things that is running in our mind, so to prevent all this, that's why, we are using these tools, right? And caution is needed when time zone is overlapping as it turns in live prices. Basically, what it meant is, like for example, if you look at a 6-hour chart, so if you know that the 6-hour time frame is going to end, and maybe in a couple of minutes or so, then you should know that, either you should be booking your profit, or, you should be waiting to carry on with the next session. It all depends, how you want to interpret your trade, right? And this helps to choose the best cross for trading during designated time. That means whatever the time frame you choose, you can choose that as the best cross. Earlier on I showed you one example, like pound is being the strongest for today, so probably, we have to go long on pound, but it doesn't tell us how far it's going to go, or it's how far it's going to be, reached there, right? And helps to avoid unattractive, dull crosses, right? And this is also, prevents from, not taking any dull crosses, right? And it helps to trade on pullback, ticking with the established trend. So that means, especially now you know that pound has already made the move, then probably what you may want to do is, you want to, when the pound has a pullback, then probably you may want to look at that for re-entry, right? The next tool is the best cross barometer. This tool complements the strongest and weakest tool. This tool helps me to choose which is the best cross for me to trade, during that time, during that stipulated time. So this one is, we can choose this tool to long the strongest against the weakest and short the weakest against the strongest. So basically, when you see numbers 1, 2, 3, 4, are the best cross to trade, especially when you look down, you look, these are the crosses that can be traded and at that time breadth, and that will be worthwhile looking at. The next tool is, we have an high-low time. Okay, this is one of the tools. Also can supplement our trade decisions. Basically, this can help us in taking our trading decisions, especially when we want to stay with the trade, right? So the high-low time is a simple theory that is used to pick the bottom and top on intraday, comparing with other pairs reversal together. So when you see a particular cross that is registered high or low against other crosses, okay, at least 4 above, that is highlighted, then it might hint us a reversal or high or low for the day. So on this example, when you look at, for example, like US dollar, it has made a high, during the time against the euro, against the pound, against the Aussie, against the Kiwi, alright? So basically, it is telling me that probably the high for the day for that cross has already been seen. So that is an indication which we may see, right? And that is a tool that can help us to hold on to the trade. If you know that, the high for the session or the high for the day is already seen. So all you know is, your stop should not be triggered, and you know that, you should be doing, especially the trade should be doing well, especially, if you are stopped, and probably you may want to ride on with the move. So this high-low time will help you to identify low-risk entries, especially trading strategy, PTE and PTX. Not to worry on this later on when I'm going to share with you the strategy, then you will know what I'm talking about, right? And it helps to complement the best crosses view. It also supports that best crosses view. And caution is needed, when the price is making new highs and new lows. You may see the time changing. So basically what we meant by that, especially when the market is making new high and new low, you cannot assume that, this is the high is already been seen. You have to wait, and you have to see that, the high has already been made. So, you are going to take our entry once the market starts to move lower. Okay, I hope I'm not going too fast, Now, are you all with me, if you feel, and this is the time, I need your attention, because this is one of the tools that is going to be very important, and this is, we call it an ultimate trading tool, because it gives us a lot of infos within that tool, alright? So I just need your attention for this. Okay, this dashboard is an invention done, like as I told you earlier on, being a trader or day trader, we know what are the things to be looked for, what are the factors to be considered before we take our entry. So that taking into consideration, this is what, we have developed the system, and the dashboard helps us to do that, right? So it helps us to identify trade setup, entry setup based on previous close, high and low. It helps us to identify prominent support resistance levels on live markets, helps to choose best cross to trade, helps to decide whether the pair is in a range or trending mode. Okay, what I'm going to do now is I'm going to change my screen to live and show you the dashboard. Then I want to see for yourself, what is so special about this tool, and how effective is this tool can be. All right. This is the dashboard. This is the view of the dashboard. Okay. Basically, what it does is this is together with our zone levels. That means it has been incorporated together with our zone levels with live prices. All right. So what it does is it is live, and this is the live price. And before I go to the live price, okay, what I'm going to do is I'm going to show you what happened the previous day, right? So when we look at the previous day, and when we look at, then we can determine what or how we can expect for today, So when we look at previous day, this is the previous day dashboard, okay? And this dashboard gives me a lot of information. You might be wondering, it's just numbers and levels, but it gives us a lot of information, and it gives me a bird's eye view of all the all the information that I need for my trading or for my trade setup or for my preparation for the next day. All right. So quickly, I just want to tell you what are the functions it has. This was the actual high, When you point onto the high, the actual high, this is the actual high for yesterday. The yesterday high was 132, and this was the yesterday's actual low, which was 130 figure. So we know that the yesterday's high is 132, yesterday's low was 130, which was about 200 pips move, and this was yesterday's close. So one look at it, I know that the market went high and closed near the low. Right, and it just closed near the low. This is one look at it, right? And when I look at my opening, this is where the opening price is, right? And we have the zone levels, all those zone levels that is mentioned here, is displayed onto our report, all right? So these levels are shared here on the dashboard, right? So we look at it, the high is been plotted onto the dashboard itself, So we know that we look at the high was within our resistance zone 1. Okay, another thing I want to emphasize, or another thing I want to tell you is, usually, okay, a rule of thumb you can say, or the system, works in such a way that usually the day high or the day low would happen within our resistance zone 1 and resistance zone 2. In fact, resistance zone 2 more precisely, So as long as, that can be another indication, that can be another clue, especially, if you are a day trader. And when the price reaches the support zone 1 or support zone 2 or resistance zone 1 or resistance zone 2, we can anticipate, that, probably that's going to be the high for the day or high for the session, So that would be another clue that I look for, especially I'm a day trader. All right. So when I look at this, we have a actual low which is also plotted against our zone levels, right? So in fact, the actual low was at support zone 7, right, and closed at support zone 5. Okay, remember I said earlier on, that zone 1, zone 2, zone 4, zone 5 are the most key levels, right? So when the market moved below and when the market closed near the zone 5, okay, this is an indication that the market can have a pullback. Okay, this is the indication. If the market has closed here, then I would not anticipate to have a pullback. But if it closed, towards the closing, the market had a pullback, so we can anticipate that we can get a pullback for today. So if I'm going to get a pullback for today, then the maximum I should be getting or expecting is before zone 1 and zone 2. Remember, the key levels are zone 1 and zone 2. So if I'm going to have a pullback, then the maximum I can get is 131.20. So that's what my anticipation is. So looking at yesterday's close on the euro, today I can expect a pullback, or I can expect a further fall or continued in the direction of the trend. So if that is going to happen, then I have to see the break of the low, then I will see the continuation. Otherwise, the pullback can happen anywhere, in any one of these levels, right? So far so good. I hope you all are with me. I hope you're not lost. So this is one of the key functions, right? Coming to today's session. Okay, when I look at this, this is today's report and this is today's levels. This is yesterday's levels and based on yesterday's levels, right? So coming to today's levels, this is where the market opened. Market yesterday closed at 130.30, and in fact today the market opened around that level. So when you look at today's session, we have the same manner. We have today's high, today's actual low, yesterday's close, and current price. So we have all these levels are indicated on the dashboard. So we do not need to go, and look for, on the chart to see, where we, right? So when we look at this, this is the live price. This is yesterday's close, today's low, and today's high. So if you look at today's level, remember, based on yesterday's close, my anticipation or my expectation is I should be having a pullback towards the level, zone 2 for max, maximum, that's the level, zone 2 or zone 1, or expect it to continue further down. Alright, when I expect it to continue further down, then probably that's the next level I would be expecting the market to stop or pause. Right? So now the market is trading here and is trading at resistance zone 2. What do you think we can do now, or how do you think we can trade this? Okay, again, remember I said, the rule is, one of the rules is the day high should happen below resistance zone 2. See, all this are, is proven, meaning in the sense, like we have tested it, over the years, and and that's how we come up with these levels, right? So again, there's one more thing I want to highlight is we have two sessions dashboard. So one is US and one is Asian session. So when we look at the US session, so in fact we have 131.05, so that is the maximum. So in other words, if I'm expecting a reverse to happen, I should not expect the price to go above this level. If above this level, then my view is wrong and my expectation is wrong, right? But I repeat again and again saying that this is all on probability, and trust me, it's a very high probability, and you can use it, and I can show you, I can show you on live charts to see for yourself how convincing it can be, right? So now, this is the US session, so I'm not expecting, or I should not expect. That means, in other words, if I'm going to put my stop loss above this, then I know that I'm pretty safe, that I would not get stopped out if the market is going to come down, right? So So far so good. This is how the dashboard looks and this is how it works. So later on I'm going to show with you, when I come in. Not to worry, I will show you all this on live charts. I'll show you on live charts to see for yourself, to see, how effective is the system. Okay, now coming back to this slide. Helps to decide whether, just quickly run through this. Helps to identify entry, exit, stop loss. Okay, it can be done. Close, high and low, I've already mentioned. Prominent support resistance levels is also been shown, meaning, the zone 1, 2, 4 and 5. And it will help you to choose the best cross. Later on I'll show you how you can choose the best cross to trade, right? And helps to decide whether the pair is in a range or trending mode. Okay, now let me show you the chart again. Okay, here. Help me to choose the best cross to trade. Okay, to give you an answer to that, what I normally do is I would look for the opening and the low or high to be within the open, because if I'm expecting the buying sentiment to go up, then usually this open and close should be within the open level. Our price level principle purely says that anything we do with the price, we like to compare it with the open and with the close, high and low, and that's how we are sharing with you, right? So here you look at this. Let's say we look at this tool, for example. See, in fact now you see, like pound, we have the open and we have the low near the open. So naturally this tells us that this would be a good cross to move, and right now this is moving, right? But again, we have to see the previous day to see how far it can go, right? Let's say we look at pound. See, pound, yesterday it dropped to support zone 4. Remember I said zone 4, zone 5, we can get a pullback, which it happened. So now, based on yesterday's move, the maximum move I should get is 15325 or 15360. I should not see beyond that. If I see beyond that, then something is wrong or my anticipation is wrong. But if you look at here, 15290, so I have another 2 laps to go, so I can still bet that, this market can move towards, but I want to exit before 15325 or 15355. Remember, these are the key levels, and this is going to be a major barrier for the bulls, right? So when I look at the dashboard, I clearly can see, where is going to be my entry, where is going to be my exit, stop loss, all this based on my previous day's close and current day's move. And another, advantage is, early on I said, it helped me to choose the best cross. Okay, now, if you look at this, run through this. Okay, now is live price based on US session. I have the euro made a high and is trading near the open. Pound is started to move. Yen is near the open, Swiss is near the open, Aussie started the move, it's a bit weak. So this is all. So looking at all this, the only cross that is giving me the move right now is the pound, right? So this would help me to choose the best cross. So if I go and see my pound crosses, then I should be getting a clear indication of the direction of the move. Can you see this? The pound, it made a low against the US, it made a high euro pound against the euro, against the yen, it has made a low, it's starting to push up, and against the Swiss, it's trying to push up, against the Aussie, it's moving because Aussie is the weakest cross right now, and against the Canadian, it's moving up, New Zealand is moving up, and Sing dollar is moving. So clearly, if I see the open and the low, I can see that it has registered low against literally all. So this would tell me that, okay, this cross is the best cross for me at this time. This time. When I meant this, that means the time belt which we have chosen. So this is the second session. So right now, we have to be a buyer on the pound, but again, buyer in the sense, but we have to be cautious because it is approaching the barrier. So two factors we have to take into consideration. So that would help us to decide whether we can buy and hold, or whether we have to buy and exit for a quick profit, so on and so forth. All the answers can be answered within this particular tool, Let me change my screen back. So this is how, and also, helps to decide whether the pair is in a range, so in a trending mode. So this one is, when the high and the low is within our zone 1 or zone 2 levels, then it's clearly, it's in a ranging mode. So I don't have to fight for anything else. I know it's in a ranging mode, so I don't have to be very optimistic until and unless I see the breakout. I hope you're visualizing that. Or maybe I can show you the thing again, to see. Okay. So if I look at yesterday's one, see, for example, yesterday's move, Canadian dollars was in a range mode. Can you see the high and the low was within the support zone 1 and resistance zone 1 and support zone 2. So this was in a range mode. So today, Canadian dollars, I'm not expecting any big move. So if I look at Canadian dollars today, if you look at today's session, the dollar CAD, see, it's literally, it's flat, and I don't want to touch this until, the market starts to move. So I know that clear indication that yesterday was in a range mode, compared to, wait, let me see, this was, sorry, earlier on I went to the US session mode, yeah? So this is yesterday's mode. Again, I think it's still, it's pretty flat, right? Because it closed before the resistance zone 2. So, in fact, the Sing dollar is it was in a range mode. So, in fact, Sing dollar should be one of the cross that to be avoided, but it can go well with the strongest and weakest. So, in fact, Euro Sing would have given us a huge profit, yesterday, So, in fact, yesterday Euro Sing would have been a good move. So today we can anticipate that Euro Sing would have a good pullback, or we can anticipate this whether to be still in a range mode, based on the yesterday's move. So all this can be anticipated by looking at the dashboard. Okay, let me go back to the slide. Okay, I think this is I've showed you the live. And it also helps me to identify the high-low open close at one glance and can visualize the candlestick pattern for all the 36 crosses, with a single toe. So basically, when I look at the chart, or when I look at the dashboard, I can literally feel the candlesticks. I do not know how many of you are well versed in candlesticks. So we can feel the candlesticks patterns in just by looking at the dashboard itself. And it also acts like a staircase for the price movement. So basically, when the price moves from one zone to another zone, it acts like a staircase. So basically, you look at it, then you know how to trade the cross, with ease. It also helps to fix, revise price targets, stop losses for swing trading. Again, I told you, you can just revise your stop losses, especially, using zone 1, 2, 4, and 5. So that would also be a good tool. And it also helps to identify retracement in one glance. So basically, it gives a bird's eye view of complete FX market. So how do I look for retracement? Okay, this is another way which I use the retracement in the dashboard. So basically, if you look at retracement, okay, dashboard, yesterday the market closed. I do not need to use a complex tools, like for example, Fibonacci, whatever tools you are using basically for retracement. What I need to just count the number of steps it has fallen, and we can count the pullback. So basically, like we start from the open, 1, 2, 3, 4, 5, 6, 7. It has dropped 7 steps, so the pullback should be at least 3.5 steps or 4 steps. So basically 1, 2, 3, 4 or 3.5 somewhere, in between, which we should be getting about 130, 75 or 130, 85 is where we should be getting the pullback, or we should be getting the retracement. So now you see today's high is 130.75, which did happen. The pullback happened within that count. So we don't have to spend our time analyzing the market. It's been done. All right. Okay. Now let me change back to the slide. I hope I'm not going fast. If I'm going too fast, let me know. All right. I can. This is not to worry. Again, I said, I will be showing you on this, on live charts. So this is because the reason is because we are running short of time. So we have to complete, the session. So that's the reason why, we are rushing. But not to worry. Definitely, I'll be showing you to see for yourself, right? Okay. Another thing we need to take note. Okay, how we take our trade decision. Because see, remember, being a day trader, the only thing we need to understand is, as a day trader, we need to know whether to be a buyer or seller. We need to know where to buy or sell. We need to know where to put a stop, and we need to know where to book our price target. And of course, the holding period, probably, you can hold it for a couple of hours or a day. These are the simple questions to be answered, especially, if you want to be successful in day trading. All right. So to know that, I think I've shared with you the levels and zones which early on, I showed you. Now I'm going to show you how I decide, whether to be a buyer, whether to be a seller, and where and when, so on and so forth, right? So to give an answer to that, every day we prepare. Early on I showed you the news, trade preparation that we mentioned whether, we are a bullish or bias. Basically, we give you the trade bias zones, So we will tell you whether we are bullish or bearish. So the bullish and bearish violation zone. Okay, these are the key levels to take note, to keep our view. That means, like if we say that we are bullish, the price should not break the bullish zone. Okay, anytime, as long as, it doesn't break, anytime the price falls or near or, somewhere near the zone, we are still a buyer. As long as it doesn't breach that level, then our view still remains. Okay, so that is the thing, right? The next is we have a PT anchor low and high. Okay, this is also been given on the trade setup, the trade preparation zone, which early on I showed you. Remember I said, anchor low and anchor high. So I can show it to you later on, when it comes to the strategy. So that would also be given. And another thing you need to take note is the session open. Usually, we believe, because our strategy, our system is all been developed, and as I said, the price level principle, all this depends on, the opening, closing, high and low. So we focus everything we do. We use the opening price as a benchmark, to gauge whether, should we be a buyer or should we be a seller. So when we look at that, our Asian session, open is 21 GMT. And the US session open is about 9 GMT. And of course, when the daylight saving time changes, then, it goes 1 hour later, alright? So this is the time we need to use now. So rule of thumb, we should use the session open as the benchmark, be in the trend direction until price stays above the violation zone. That means, as long as, if we say we are bullish, then probably, we look to buy, right? And we use the open as the benchmark, right? And of course, knowing the potential targets. So of course, we need to know how far we need to see, right? And how far we need to see whether the price target will be met or would not be met, so that our risk reward ratio can be understood well. So we can use this as an gauge. Okay, this is the trades preparation, which I think early on I have already shared with you, right? And I think I will be sharing with you again, Okay, now I think more or less. Oh, hold on. Okay, more or less I've done with all the tools which we use. All the tools we need to use it before we go for a trade setup. Now I'm going to share with you the strategy. Do you want to have? You have any questions based on all the tools? Probably I can have about maybe about a 5 minutes break. If you feel if you need to, because I need your attention, or focus, because the strategies is the one that is going to guide us to see our entry. So do you all have any questions so far? Based on the tools which I shared with you. Okay, let me quickly run through, see whether okay, just give me 1 minute. Okay, I think more or less. Okay, I think let's go on. All right, just give me 1 minute. Just need to. Okay, now we're going to the strategies. Remember, this is the key things to be taken note, because the strategies is first time we are revealing it through FX Street, and of course we are privileged to do that, and of course we want to share with you, and of course if you look at it, it might look complex. Again, early on when we looked at the dashboard, it looked complex, but when you look at and use it, I'll tell you, you simply love it. You cannot resist it, right? So the same manner, now I'm going to share with you the strategies, and the reason why we have done this is because to name it so that we will be easy for us to recall. All right. So we have created 7 types. Under the word precise. So we have 7 types of strategies. Okay, all in all, 7 types buying and 7 types of selling. So we can focus on almost about 36 crosses. So we can look for opportunities, right? The first strategy is, we call it paramount, or of course the most important or most commonly found, right? The next strategy is, we call it ruse or trap. Okay, when I say trap, it's either it's a bullish trap or bull trap or bad trap. So that's the strategy. And the next strategy is, we name it as edge or boundary. Meaning especially when the market moves down towards the it can be like a double bottom, double bottom or double top, or maybe towards the previous high or previous low, so on and so forth. And the next strategy is consolidation or range, right? So basically, this consolidation or range is also, I think the word would answer your queries, meaning in the sense, whenever the market is caught in a range or consolidation, then this is what we want to apply. The next is inspire failure. Okay, what we mean by that is basically, we are expecting the market to go up. Right? Or we are anticipating the market to go up. But what happened was, there was some announcement, some news came out, and the market reversed. So that kind of failure is what we are referring to. It can be a pattern failure. It can be any kind of failure. But basically, it's an inspire failure. That means we strongly believe it's going to go up, but the market reversed. The next strategy is called supreme or power, meaning in the sense, this is a very powerful strategy, especially is together with the trend, and of course The last one is, we call it an extension or breakout, So all in all, the strategies, we have 7 types. So the extension is again, it's a bit risky. That's why we put it last, and we can look at it. So later on, I'm going to share with you all the strategies one by one. Then we're going to look at live markets, Then you see for yourself, whether is it very complex or very easy to use. Okay, the first strategy, we call it a precise strategy, PTP or paramount. All you need to do before you go for a application of the strategy is, you need to have a simple check. All you have to do is spend a couple of minutes studying, like the previous day, earlier on I showed you, look at the dashboard. You study the previous day's behavior of the market, then you anticipate today, So then after that, we can expect, or we can predict, what is to be expected today. So the setup conditions is usually, you look at this on the hourly trend, when it's mentioned like up, turning up, sideways up, and limited down. So basically, when any of these words are mentioned, you can safely look to apply this strategy. But again, whether the strategy is mentioned, this strategy is all developed purely for day trading. So if your goal is about getting about 30 to 50 pips, then what I would suggest is, of course, it will be best for you to pay attention to all this. But sometimes the move for 30 to 50 pips will happen. If the strategy is really working, right? So now we look at the prerequisite. So this is the simple check. We need to check to see whether this strategy applies. Okay. The check is the low is less than or equals to S1, and the low is greater than S2. So this is a very simple check. That means what you need to do is check whether the low and high, if the low is below S1 or equal to S1 and greater than S2, and the low is greater than or less than PT anchor low. The anchor low is given on the trade preparation zone, and the low is greater than buy violation zone. So if all these conditions are fulfilled, okay, naturally, like if the low is less than S1 and greater than S2, I think this buy violation zone would already been happened. But it's good to check, so at least we know that, okay, we are on the move and we are together with the system, right? And our trade entry is between, I would say, between 3 to 5 pips, greater than open, greater than R1, greater than anchor high, or greater than anchor low. That means the condition can be any one of this, right? It can happen in any one of this. I am a buyer, this is where I'm going to go for a buy, alright? Now, the stop loss is 5 pips less than the registered low, or 5 pips less than S2. Okay, are you all with me? I hope if anyone is getting confused, let me know. Not to worry, I'll show you the chart. I'm going to show you the chart. I'm going to show you, right? Okay. Now, this is my entry is greater than any one of these levels. Stop loss is below the low or registered low. Okay, and my profit is, if I'm calling myself a conservative trader, then I would exit between 3 to 5 pips less than R1 or R2. Remember, I said that, the day high, the day low would happen within our zone 1 and zone 2 levels. So if you are a conservative trader, then probably you may want to exit before that levels, before you want to know whether, the price is going to go further up or further down, right? But if you call yourself an aggressive trader, then probably you may want to go less than, between 3 to 5 pips less than R5 or R5, which is, R4 or R5, which is our zone 4 or zone 5. Precaution. it should not be in a range trading more than 3 times between anchor low and anchor high. So what do I mean by that? Okay, let me show you the chart. Okay, let me change the chart. Okay, this is the strategy, okay, which we have showed you on the slide. Later on, when we go to the live markets, then we would look at live markets, provided, again, if the time permits, right? So you look at it, this was done on the 1st of April 13th. And this was the strategy P. The vertical line here on both sides, this is the day open, this is the day closing. And this is the support zone 1 and this is the support zone 2. Remember, our condition is below support zone 1, above support zone 2. Right? And our condition for entry is also, any one of this. Remember, let me go back to the slide. Oops. See, the condition is can be greater than open, greater than R1, greater than anchor high and low, right? So can be any one of these levels depending on the market condition. So on this scenario, we can even enter above the anchor low. What would be somewhere this would be the anchor low, right? So it would be it's not mentioned here. Our entry can be here or even here. Doesn't matter. We are giving so many options because the reason is because a day trader, when you are on the screen, remember the market is on 24 hours, right? So when you come in front of the screen, sometimes the market may have moved. Sometimes the market is just has started to move. So whichever way you are, where you are, you can still start to trade. So that's the whole idea, right? So our entry is, opening was at 128.10. So we put about 5 pips above the open. So we put at 128.15. And our stop loss is below the registered low, which is about 12770 was the low. So we put about 65. And our price target is if you're planning to exit before R1, probably, you may want to exit at 12855 or 12875. So the market did hit before, and if you put on before closing, then probably you would have exited, still with a profit, but not a loss, right? So far, is it clear? Any question on this strategy? So I just want to emphasize that is the only check we do is the registered low is whether it's below, above support zone 1. This is the only check we do, and we use the benchmark open. It can be any session. The anchor low is somewhere here. It's not highlighted here. So the anchor low is somewhere here. Not to worry. Again, when we look at live charts, then I'll be showing you, right? So it can be any of that entry. So that's why, we have mentioned here, right? So this is the first strategy. So the opposite is true if we are a seller. Okay, meaning if we are a seller, again, this is the PTP. The seller is the opposite, meaning the high is greater than equals to R1 and less than R2. Okay, and again, high is less than or greater than PT anchor high and so on and sell Y and so on. So this is just the direct opposite. So if I can clearly visualize this, then I can also visualize the opposite. S1 and R2 pivot points. Okay, we do not use pivot points. Okay, for information, I'm just telling you this. We do not use pivot points. As I told you early on, these levels all are derived by using all the tools which I mentioned early on, meaning the moving averages, trend channels, Fibonacci, Gann numbers, Andrews pitchfork. All these tools are used. So it's not pivot points. All right. Okay, now the next strategy. Okay, are you all comfortable with the first strategy? Okay, now the next strategy we look at is it's called a PTR or ruse or trap. Okay, so basically it's a trap. So again, the setup conditions are, up, turning up, sideways up, and limited down. This is any of these words, still is applicable. This prerequisite is the low is less than S2. Okay, that means the low is less than S2 or less than PT anchor low, and low is greater than equals to buy violation zone. So basically, the market has fallen. Okay, basically the market has fallen and it goes below S2. So our main concern is to check whether the registered low is below S2. The registered low, it can be for the session or it can be for the day. So basically, this is the check we need to do. The trade entry is 3 or 5 pips greater than open, again greater than S1, greater than anchor low, or greater than previous day's low. So any one of these conditions is fulfilled, you can still go. So again, you use open as a benchmark. Okay. So here, stop loss is 5 pips less than registered low, or 5 pips less than S1 or S2, depending on the condition. Again, if you want to revise your stop losses, you may do so. All right. The price, the profit, for conservative is, it can be R1, R2, and it can be, open. See, when we refer to open, it can be the second session open. So it can be any open. So again, if you want to exit before, if we have an early entry, you feel that, the market is not that clear, we are not that confident, probably you may want to exit before the open is reached. Then if you are aggressive, if you call yourself an aggressive trader, then probably you may want to exit 5 pips less than R1 or R5. Again, precaution should not be ranged on more than 3 times. Okay, this one I think I need to show you. Earlier on I didn't show you this. So this one, it should not be range trade more than 3 times between anchor low and anchor high. So let me show you that chart. Okay, here. This was on the 25th of March. Okay, this is the PT strategy R. So in fact, this is where the price opened. So what we meant by a swing of the condition earlier on we mentioned. Should not be in a range mode more than 3 times between anchor low and anchor high. What we mean by that is, this is the open price. The price should not go up, it should not make a small high, then it should not come down, then it should not come up again. That means, more than 3 times crossing the open, So that is what we meant by not doing that. If that condition, if you see the market is moving to and fro the open, then probably, this is not the condition which we are looking for, then probably it is in a range mode. So here, if you look at this strategy, the market opened here and in fact it moved to a resistance zone 1 and resistance zone 2. So the market tried to break above the resistance zone 2. Okay, that means this is the opposite, above the resistance zone 2. So our entry is sell at 130.20. That means 5 pips below resistance zone 1 with the stop above the high. That means once we start to come down, this is where we start to sell. Then, we put a stop above this level. And of course, your price target, again, depending on what kind of trader you can do. So, the question is, what is the difference between Paramount and Ruse? Both look similar, right? Remember I said, our check is, the registered high is where we make our check. Registered high and registered low. If we are looking at the registered high, okay, let me go back and show you that. See, for Paramount, the low is less than equals to S1, greater than S2. And for the high is greater than equals to R1 and less than R2, right? This is for Pair 2. That means the high should not be above, should not be below S2 and should not be above R2 for Paramount. And for Ruse or Trap, the low is less than S2 and the high is greater than R2, right? So this is a slight difference. So what you need to do is, you look at the registered low or registered high. Then you also look at the high-low time. Remember, I said, beginning of the session, the high-low time. So when you look at these two, in fact, should give us, a clue, what strategy we are in, and whether is it worth taking that trade setup. So this is what this is how you show the difference. So basically, the high and low, whether is it above or below zone 1 or zone 2. So in other words, here, it tried multiple times, in fact 1, 2, 3 times above the R2, but it did not, the bulls did not hold, and that's why, it started to fail, right? So this scenario is, I can go for a sell, once it breaks the R1, right? Okay, now, next. The next strategy is, we call it a PTH, or PTE. So basically, the setup conditions are still the same. Now, the difference is, the low is less than or equals to S3 or, even S5. That means, once it starts to fall, once the price starts to fall below S3, S4 or even S5, okay, this is the strategy falls is, we call it a PTH or PTE. So this one, the low is less than equals to anchor low, and the low can also be less than previous day low, but greater than bullish violation zone. So this is the only condition you need to check. So our first check is this, then the next check, see whether, this thing all fulfills. Again, our trade entry is 5 pips greater than S1, greater than previous day low, greater than anchor low, anchor high or bullish value. So see, the reason why we have given so many entries is, you should be aware that, as a day trader, sometimes when you're on the screen, you may not be, within the time, the chart, the price may not be during that level, can be in any one of these levels. So that's the reason why we have given any one of these levels. And of course, from there, we can predict our target together with, if you have a late entry, then probably you may need to exit early because, the price target is going to be reached. So, of course, the best thing is you have to, your price target and the risk reward would also be depending on the entry. The stop loss is less than 5 pips, less than today's registered low, or less than S2, right? So this is the stop loss. Again, conservative, if you are a conservative, you call yourself a conservative trader, then probably you want to put in like 5 pips less than R1 and R2 or even anchor high. Or if you are an aggressive trader, then probably you want to put in at 5 pips less than R3 or R4. Sometimes when you call yourself an aggressive trader, what you can do is, probably you may want to do some like scaling in, scaling out, meaning in the sense probably you may want to book partial of your profit at one level, then another half at a different level. That would also be another way of doing things. Okay, and this is always check the registered session low, or this is low for entry, and if you are a seller, then probably you may want to check the registered high for the entry, right? This is You might wondering why is it so many levels or lists are very close together. Okay, this is why, he said, this is purely, the system was developed for day traders, right? And this levels, if you notice, the levels, when it's reaching near the resistance levels, is very near, and when it goes further, then it goes further away, So that is how the system works, especially, when you look at the market. So this is again, this is on the 4th of April. If I'm not mistaken, I think this was during the non-farm payroll. This is on this day. We were on the screen. So here again, this was the day open. This was the day high. So we have the open here. We have the support zone 1, 2, anchor low here, and we have a S3 here. In fact, S4 here. The price moved towards the low. So our entry would be probably before the anchor low. That would be our first entry. Then, above the S1 or above the open, whichever way, which we feel. Because this is going to be a huge move, right? And of course, we want to exit before R1 and R2. See, the reason is, you might be wondering, but the thing to take note is, when we plot all these levels on the chart, we know that where is going to be our entry, where is going to be our exit, and where is going to be our stop loss. So all these are crystal clear. But when you, of course, the reason why you have seen like so many lows is because we want to show you the difference. That's why we are showing you all these levels on the chart. All right. So it all depends what kind of trader, and this would have been given you, that kind of rewards. But we are not saying that you can exit at that level. It all depends again. What kind of trader you call yourself. Okay. Am I going too fast? Okay, the next is, we call it consolidation or range. Again, the setup conditions is still the same conditions. So you see, it might look complex. Again, that's why I keep telling again and again. It might look complex, but when you look at it and when you use it, things are very clear and very simple. So here, the prerequisite is low is greater than S1. And you may or you may not even see the anchor low or anchor high, especially when it's caught in a range. Sometimes you may get it or you may not get it. If you don't get it, and sometimes, if you can just say, the requisite is, probably you need to find out whether, the market, if the market, is in an uptrend, then probably we might look to buy on the bottom of the range. If it's in a downtrend, then probably we may need to look to short in the high of the range, that is for the sell. Trade entry is 5 pips greater than registered high, greater than prominent zone levels, or greater than support zone 1 or open. So basically, anything, once we start to break above the range, then we start to do. The one thing you need to take note is, we need to compare it with the open. So if you see that open and the range, is not then it's going to be a bit difficult, right? The stop loss is less than the congestion zone, or less than S2, or less than registered low, whichever way you feel. Again, prominent zones. When we say prominent zones, it can be because, it's in a range. So we wouldn't know whether, it is the R1 and R2 can be before that. So sometimes when we look at the chart, then we see whether, we want to exit before that level. So this is all is going to be, basically it's a hit and run, right? So if you call yourself, let's say you call yourself a conservative trader, you may not want to even consider this strategy. But again, being a day trader, remember, a day trader is basically, we look for opportunities day in and day out. So basically every day we look, if there is an opportunity, we take. If there is no opportunity, then probably we just stay sidelined. But we cannot be saying every day, there's no opportunity, right? So that's the reason why we have this kind of strategy. So here, this is the same. And one thing I want to stress is, if you notice, we have purposely chosen all on euro, because we did not pick on particular cross to show that, okay, this is what, because the reason is, you might be wondering, basically we can just randomly choose, but we specifically choose all the cross. Sorry, just give me 1 minute. All on euro, so that it is. It can be seen literally every days or every alternate days. So that's the reason. All right. So here, if you look at it, this is the open, this is the day close, and this is where this is the range. So this is the registered low. So probably our entry would be somewhere once the break of this high. This is what we meant by prominent levels. So once it breaks this, then probably we can want to take. Then we want to put our stop below the registered low. Then we may want to exit. And this one did give us about 25 to 55 pips within the day. So sometimes it's going to be, especially when we are looking, especially like today is one of the days, because today there is no data out. So that is one of the reasons, this kind of days you usually expect this kind of range trading, especially when there's no data out. The next strategy, we call it inspire or failure. Okay, this is basically the set of conditions is still the same. The prerequisite is the high is greater than anchor high, and the low is greater than anchor low, and the high is greater than previous day high. So basically, I'm very strong that the market had a breakout, and we expect the market to move further up, but unfortunately, the move did not happen, like as I said earlier on. This is a failure. So the market reversed. Then and usually this kind of move would give us a huge reward. So we don't have to be in a hurry to, especially if you are able to identify this strategy. We don't have to be in a hurry to book the profit. So if you look at the entry, it is 5 pips less than R1, or less than anchor low or anchor high, or even less than S1 or less than registered low. So any one of these entries still acceptable. Stop loss is greater than R1, greater than registered high, or greater than session high. Then profit is greater than S1, S2, S4, S5. Aggressive is S4, S5. So this one, as I told you, this is usually it gives us it gives us a huge move. Again, this is a precaution. It's not mentioned because there's nothing much to be considered, but the only check you need to do is to check that the price is trading below the open. So probably that's the only precaution you can check, because as long as all our entry is based on, remember I said based on opening price as our benchmark. So if you look at this is again, this is on the 25th of March. I think this chart looks similar. Previously it was, I think our entry was somewhere there. Our entry was somewhere here. Again, it's the same thing. It's a bearish violation zone, and this is where the failure. So if you look at this is the previous day high. The market broke above the high, and it looks very convincing because the market did breach yesterday's high. So we felt that it's going to continue. Then we look for a buy. Then the market started to reverse, and it was a huge failure. and this one did give us a reward of more than 35, 65, 95 pips, depending on again the trader type you belong to. So this is also again, it all depends on what kind of trader you call yourself. It all depends on how long do you want to hold the trade, whether it's going to be a very fast one, or whether it's going to be you want to wait until the end of the day. All this is what decides the price target. Okay, the next, the second last, I think is the second last strategy. This is, we call it again, the setup condition is still the same. The prerequisite is the low is greater than S1 and the low is greater than or less than the anchor low. So in other words, the price did not touch the S1. Okay, if you notice, all our strategies looks very complex, but in actual fact we are referring to the low and high. If the low touches the S1 is one strategy. If it touches breaks the S2 is one strategy. If it doesn't touch is one strategy. And if it breaks beyond S2, it goes below S3, S4, then it's one strategy. So all this, so it's very easy to remember. It's not that complex that you think, but it's just that we need to check where is the registered low, then compare it with the session open, then you pull the trigger. Okay, now coming back to this, the low is greater than S1, low is greater than or equals to anchor low, greater than open or low, tested twice and failed, and low is greater than violation zone 1. So if you notice, earlier on I showed you the pound on the dashboard. So probably that may fall into this strategy, but the setup conditions may not fulfill. So that's the reason why your price target. So your price target would depend on the setup conditions, right? So this is what you need to do on this. The trade entry is 5 pips greater than open, greater than R1, or PT anchor low or high, or previous day's high. So any one of these conditions, we want to go for an entry, and as long as and the stop loss is below open or below S1, all right? And our price target is it can be R1, 2, 3, 4, depending, because this is a supreme, meaning it's a very powerful strategy, provided this condition is met. If this condition is not met, then probably it can still give you that maybe 30 pips, 40 pips move, but it may not be that powerful. So that's the only change you can see. But other than that, you can still apply that. All right. And the profit for aggressive is of course less than R4 and R5, and should not be in a range trade more than 3 times again the anchor high and anchor low. So the sell is the opposite, which is again the high is less than R1 and the high is greater than or less than anchor high, open, or high tested twice. So what do we mean by that? Meaning the market open, it fell here, it fell maybe about 20-30 pips, then it started again to test, and the open, it was rejected again at the open. So basically that's what it meant by high tested twice. All right. And then the rest all the same. All right. Yeah, the setup conditions is all the same. See, that's right. The setup conditions is all the same. The only difference is the registered high and registered low. So if you are looking close attention to the registered high, registered low, then it should give you a clue. And remember, this is purely, okay, again I repeat, this is purely for day trading. So you have to look for, and you do not get yourself mixed up with long-term view or a higher time frame. Again, this is euro on the 3rd of April. Again, this was as buy. So if you look at this here, this was the open. Where was the open? Okay, the open was somewhere here, right? So it did not even touch our S1. So it went, it come down, and remember, this is what I meant by tested twice. So it can be tested twice, which it can be a small, you call it a double bottom, whichever way you feel. It can be here, or even it can be even somewhere testing here. It still is acceptable. So this is again, our entry is 5 pips above our anchor low, and our stop loss is below this low, and this is where we exit before R1 or R2. Alright? So this is within the day. Okay, now this time frame we use, okay, all this you can use a 15 minutes chart. Okay, all this you can use on the 15-minute chart, and 15 minutes is what we focus on. Mainly we focus all on 15 minutes chart. Right? Okay, the final strategy is, we call it a PT extension or breakout. This is again, the setup conditions are the same, and the prerequisite is again check for common patterns, range, breakout, continuation patterns. Basically this is when you look at it can be like a typical, like a head and shoulders pattern, or double top, double bottom, whatever patterns which you are familiarized with, right? So this is again, this is a PT anchor low which must happen before the breakout, recommended only for swing trading. So if you are day traders, if you call yourself a day traders, and if you call yourself conservative traders, then probably you may not want to try this. But it usually gives a huge reward, but I'm not saying no to it. But again, you have to ask yourself whether do you want to go for that kind of risk, especially if you practice putting about 30 pips, 40 pips stop loss. Right? Our trade entry is 5 pips greater than at the break point. Okay, breakout point. So this has to be above the breakout point, plus it has to be greater than the open, alright, or greater than R1 or greater than anchor high. Stop loss is less than R1, less than previous day's high, less than open, less than anchor low, whichever way, if you feel that your risk reward, whichever way it permits, then probably you may want to stick to that. The profit, again, this is for conservative, is I want to exit before R4 and R5. For aggressive is even, you can expect it to go beyond R9 and R10. Meaning, in the sense, again, this is, we said, is purely good for swing trading, so probably you may need to wait. It may not happen within the same day. It can happen on the following day, which we may not know, right? So again, this is precaution is the only thing I can think of is not much to be concerned, because this is also we know that the pattern, we are able to identify the pattern, so there is not much of the precautions needed. So here, if you look at this is a range breakout, meaning in the sense, of course the pattern is not fully covered. So here, if you look at this, the market opens somewhere here, the support, the low is above the support zone 1, and the breakout happens somewhere here. So probably this is where we exited, and this is the within the day. So sometimes again we need to ask ourselves, especially this is purely for day traders. What we are telling you is, if you are a day trader and all you are asking is about between 30 to 50 pips a day, all you can do is you can apply this and you can carry on doing it. So that's what we are emphasizing on. Okay, what is the difference between a daily high-low and anchor high-low? Okay, the daily high-low is basically, if you look at your chart, this is normally shown on the system itself. So if you look at this, so if you see the prices, Okay, let me see. Yeah. So if you see here, we have the price open, we have the day high, we have the day low. So this is what we meant by day high, day low, registered high, registered low. This is what we meant by that. And what I also, the anchor low and anchor high is given from our website. So this is, we help you to choose the anchor high and anchor low. So that is because we do not want, because it's not as simple as you think. So sometimes, you need to take the correct point, so that's the reason why it has to come from us. So you seem to trade, it's like, you can just, it's all purely on day trading, purely on, for your intention is to catch, about 30 to 50 pips, then it's very easy to do, especially, without emotions, right? So the system is developed in such a way that, it's like you just keep on doing it. So some of the things I just want to share with you, characteristics of a successful trader is, of course, you need to know yourself, know thyself, meaning in the sense you have to identify yourself what kind of personality you have, meaning in the sense if you're a person, if you're a very nervous, especially when you initiate a trade, you want to just carry on the trade, then probably you can call yourself a conservative trader. But if you are a person, you call yourself a very calm person, even if you take in a trade, if you put an entry, you don't mind, putting a stop and all these things, then probably you can call yourself an aggressive, and you can go slow and steady, And when you say aggressive, there's also other things, is you are a risk taker. Conservative is basically you're not risk taker, basically you don't want to take unnecessary risk. So that is also falls into that category. And ask yourself whether you're a speculator or not a gambler, because I do not want yourself to become a gambler, You do speculation, meaning in the sense, certain facts are known, then we use it to take in our trading decisions. So I just not just blindly, okay, I see this, I go and buy, I go and sell, then it becomes purely gambling. Money management also makes a key role, making a person successful, because you must know when to hammer the market, meaning in the sense when to add in more, when to be very nimble, all this plays a key role. And also, there's no shortcut for success. Nobody is, there's not like, it's like so easy as think. You come in within 1 day, 2 days, straight away we can be successful. It has to be a tedious process, meaning in the sense a lot of work has to be done, a lot of research has to be done, before you become successful. And high expectations to become an overnight millionaire, I do understand. The reason why I'm telling you all this is because a lot of clients, when they come to us or when they come to our website, they write to us saying that this is what we want to do, this is what, I do not want to, I want to make so much, and I'm not prepared to risk so much, that kind of scenario, alright? So, and of course, we need to have passion, love, enduring strategy, psychology, systems, all this. That means a lot of work has to be done. You need to understand the market, you need to love the market, you need to have the feeling, you need to feel the market. And you need to have a lot of enduring, meaning in the sense sometimes, when you get stopped out, okay, that, okay, you can do it, you have to work on, and of course the strategy, what is the strategy that is right to you, then apply it. And that's how you make yourself a successful. Psychology and systems is also, this is very important, especially if you feel like you want to become successful, right? So this is a quick keynotes to take, especially, if you want to become successful using our strategy, using our system. Look at the dashboard and study the previous day price action. Check the previous day close and high, which I did earlier on. So when I look at it, I anticipate, okay, this is what is going to happen today, this is what we expect this to happen. Check at the economic calendar before initiate day to day. You check at the economic calendar. Then you look at the market. So at least you don't get yourself caught in any of the data announcement. Decide whether it is in a range or trending mode. Okay, from the PT report. So if you look at the dashboard, you should know that whether it's in a range or a trending mode. So that would also give a clue. Get the violation zone and PT anchor levels. Okay, this is from PT trade preparation. So basically, you can get the violation zone and these levels, then you can decide how you want to trade. The strategy is identified by comparing the registered low-high with the anchor low-high and the zone 1 and 2 levels, and together with the session open. Remember, the session open plays a key role. Okay, and this is where we need to identify, or we need to use as a benchmark to decide whether we want to be a buyer or seller. Right? Ignore the strongest and weakest. Best cross to trade when market is in a range. So when the market is in a range, you have to ignore this tool because it doesn't give us any clue. So the only way how I know whether the market is in a range or not in the range is when the market when the price moves out of zone 1 and zone 2 levels. So if I do the previous day, if I look at the previous day, then I know the market has already moved. So at least I know it's not in a range, so I know it's worth trading. Alright? So the entry is taken at the S1, S2, R1, R2, session open, anchor low, high low as per the strategy. Stop loss is placed as per the strategy. Exit depends on the trader type. Risk reward should not be less than 1. So anything, when you ask yourself, okay, this is going to be my entry, this is going to be my stop loss, and this is where I'm planning to exit. So all this will give us a clue. Okay, all this will tell me, whether my risk versus reward, whether is it worth or whether it's not worth the effect, probably we may want to do, right? Okay, now, just live signals. This is something, which we have it on our website. We have just started this to do this, so probably, you can see for yourself to see. And basically, these are the things that can be seen on our website. Okay, now, finally, we come to just, I think more or less, we are coming to, now we look at one market, just to do, how we look at. Okay, now, let me show you. I mean, I can finish one and tell you this is what my view, then probably from there we can go on, alright? Okay, let me do one session. Okay, this is the dashboard. Okay, now let me see. Okay, this is how, in fact, Euro, as just now we had a alert saying that it broke our resistance zone 1. Okay, and in fact it is giving 1 and 2s, which is saying that this is the strongest cross. So onto my right, Euro is Euro US is number 3, So in fact, Euro Kiwi is the best cross that is to be traded, right? So if I run through, so if I look at the high and low time, this is not giving me any support on this Euro US. So chances are, probably the high-low is not seen yet, so probably then I have to be a bit cautious on this. So now, knowing all this factor, okay, next, I think there's no data out, right? Okay, now, Euro, if you look at, because I need to know the violation zone and the anchor levels, right? So if I look at this, Euro is still within a range, It has an hourly potential target of this levels, and the violation zone is this. That means basically the hourly we are still seeing up, alright? And the 15-minute is we are still seeing down. As long as the bearish violation zone are at 13155, 132 figure, right? And the anchor low and high is 130 and 130.65. In fact, the price has just breached the anchor high, right? But trading below the anchor, bearish violation zone. Overall, I'm supposed to be a seller, right? I'm supposed to be a seller as long as this price is doesn't break, right? Then we have a near-term resistance, right, at 131 figure and 1315. So basically, we are looking to short near this level. Okay, we have already given a trading tip on this. So now, after looking at that, okay, we can either look at the dashboard or we can look at the report. Okay, let me just quickly look at the report, then we go to the dashboard, right? So if you look at the report, in fact, I think we have mentioned 131 figure and 13115. So all we know is that's our zone 2. Okay, zone 1 is 13085, 13105. This is the two levels for me, key levels for me to take note, right? So if I look at all this report, it says sideways 13165. Basically, the market is in a sideways, so it's still down. Previous month high is 13135. Okay, these are the key levels for me to look at. So I'll just run through quickly. I know, okay, these are the levels I'm looking for. So the support zone 1 is 13015. Support zone 2 is 12995. Okay. Now, coming back to the dashboard, we should be able to come to a conclusion what we want to do. All right. So now, if we look at yesterday's session, okay, as I told you, we have a huge barrier at 13120, 13140. So my stop, if I call myself a conservative trader, then I would want to put my stop, near this level. If I might call myself an aggressive trader, then probably I may want to put my stop above this level, which is 131. 40 or 45 level, right? So this is where I want to put my stop. So this is more or less is determined. Looking at today's session, okay, right now the market is trading at resistance zone 1. Okay, now how do we identify or how do we know whether which is the strategy which we are going to do or what is the strategy we are going to apply? Based on, early on the trend was, hourly was sideways, basically it's still pointing down, right? Now, when I go to the chart, okay, when I see the chart, let me change the chart. And if I'm going to plot my levels, remember, our strategy is all based on the registered high and low, right? So in fact, the registered low is somewhere 10320. So this was happened somewhere in the morning. Okay, now our entry is going to become knowing the registered low together with the session open. All right. So let me highlight to you the session open. Okay, now, see, all our entry is based on, if you notice, it might just tell me, like it will take about 10 minutes for me to decide, what I'm going to do. Okay, now, this is the morning session open. This is the give me 1 minute, I'm not able to. Okay, this is the US session open, right? So, if I go and look at a 15-minute chart, okay, this is my open for the US, okay? Now, our anchor low and anchor high. Okay, let me show you the anchor high was, I think, 13065. Let me show you that. See, if we know the anchor low, anchor high, resistance 1, resistance zone 2, once we know that, then we can identify, what strategy, we are looking for, Let me show you one. Where is this? Yeah, okay. So here, if I look at, okay, we have an anchor low and anchor high is 130 and 130.65, right? Violation zone is 131.55 and 132. So anchor low is this, right? So looking at this, okay, 130 and 130.65. So this is the anchor low and anchor high, right? So I highlighted this. Now my resistance zone 1 is 131.85 and 131.05, right? So right now the market is trading towards the high. Okay. Now what we have to do is we have the open. This is not open. This is the open, right? This is the benchmark. So we have to wait and see where is the registered high going to be. That means now the market is testing towards the high, right? So what we should do is, right now we are still too early for us to identify the strategy. But if the market goes up, if it turns from here, maybe I'll show you with 1 minute chart, then you can clearly visualize. That this is a 1 minute chart. So if you look at a 1 minute chart, right? So right now, if you see, the market is testing our zone 1, and right now it's having, see, this is the typical behavior. This is what I meant by, when you look at it, and plus minus few pips, this is how the price moves. So now we wouldn't know the strategy until this bulls are exhausted. That means whether they are going to test the high. If they move higher then fail, then we know that this is beyond S1 and S2, right? So if it breaks now, then probably this is going to be a PTP strategy, right? But if it goes higher, then it should be the next is P. The next one is in between the next S2. S2 probably is, if we test the S2, then probably we call it a PTR strategy, right? So basically, right now, as a trader, day trader, I'm not doing anything. So I have to wait for the market to give me more signals. Remember, this is in a range. So, this is in a range, it's in a consolidation mode. So basically, we are a seller. Remember, earlier on also we gave a tip, basically that, if the market reaches around this level, then probably we may want to go for a short, having all these levels in mind, right? But right now in life, because the unfortunate thing is, because there is no data today, that's one. Another thing is, the market is quiet, so there's nothing much can be done. But the only thing is, when you look at live markets, when you plot all these levels, then you can see for yourself to see how convincing it's be. Anyway, not to worry. In fact, next week, we are having live trading with FX Street again. Next Thursday, if I'm not mistaken. Yeah, we are having one more week. Then followed by, we again will be having. So then, if you can follow, then definitely you would understand what I meant by that. So you have to feel it. This live market, especially day trading market, being with no data out, there's nothing much can be done. But all I know is, okay, I have to, after I define the strategy, my entry, exit, stop loss is all determined or defined here. So then I would know that, okay, this is what I want to do, then that gives me my that's put my emotions at bay, meaning in the sense that I do not be emotionally panicked, because I know this is what I'm doing and this is what I'm expected to do. You do not believe it? Okay, what I told you, remember, the day high, day low happens within our zone 2 levels, support 1 and support 2. You can go and test it out. We have been doing it for we have tested this for almost for the last 10 years of data, to come up with this strategy, come up with these checks to identify a specific way or specific approach in looking at the market, right? Okay. I think it's been a long 2 hours plus. I think it's been a wonderful session. So, if you have any questions, any questions, feel free to ask, so I can quickly, answer any questions. And another thing is, okay, let me see if that would be easier to compare. I think more or less the questions all are there, right? Wait, what is your question? Can you show violation? See, explain. The violation zone is basically, okay, what it means is, to maintain our bullish view or bearish view, that level has to be hold. Okay, meaning in the sense, if we are giving a bullish violation zone, and if the market breach that level, then probably our view is wrong. Probably on that day, the market started to move. So that is where. That means we are giving you a referral levels for you to gauge. So you can clearly define that, okay, the trend should be down as long as that level or that zone holds. So that is what it meant by violation zone, right? Okay, any more question? Okay, just to take note, okay, Precise Trader offers all attendees 1 month free trial of our reports. So you can give us, once you do register yourself into our website, and it will given straight away. You'll be given 1 week free. Then we'll extend it 1 month. The reason why we are giving this is we want you to test it out. To see for yourself how easy can be, day trading, especially with the system, with the levels that we indicated. But of course, like as I said, this is, you have to feel it. There's no way. I mean, some of you might be thinking, it's so complex and all these things. But end of the day, if you use it, you feel it. And one thing, you must understand the fact that this is a number game, right? So this is a number game which we are playing. So it has to be, eventually I think it has to be numbers, right? So, and that is one of the reasons why you see a lot of numbers. And also, I'm also a bit, done this numerology. I play with a lot of numbers. So like I think early on someone said, I use number 7. Yeah, in fact, everything we do, we have a reason behind. It's not like we do. Yeah, we will definitely give you access to dashboard, because see, like as I said, our intention is we want you to try the full system, right? So what we would suggest is, the attendees, I think, we all have been so great. We've been sitting with me for the last 2 hours. So definitely, I think we hope we will give you, and you can try it out for a month to see, right? And again, we take this opportunity to thank FX Street and also you for making this event successful. And also we want to say a big thank you to FX Street. I think they've done a wonderful job of organizing this event. Some of you might be thinking that our system is a bit complex, but I'll tell you, because it's so much of effort and time, so much of work has put in to come up with this system, right? So once again, thank you very much. And if you all have any questions, any queries, you can write to us. We will be very glad to answer you. Right? Once again, thank you very much, and looking forward to see you again. Till then, goodbye. Okay, my email is you can just write to info@PreciseTrader. Okay, my website is, I think website you know. So email is info at or support at precisetrader.com. Right? So either you can send to info or Precise Trader, whichever way. I think we would be assisting you, right? So looking forward to see. This is the email, right? So you can write to us, right? Okay. Thank you once again. Have a great week. Till then, goodbye. This is Rajoo here from Precise Trader. Thank you.